One of the most common questions I get on a regular basis is, hey, my CPA said I have to pay estimated taxes, but my friend's not paying. So why am I paying? So today I'm going to go through why you may have to make estimated tax payments and how they're made and calculated. The first most important thing to understand about estimated taxes is the type of income that you earn that actually causes you to have to make these type of payments. So a lot of you may be W-2 wage earners, meaning you're employed by someone. This means that the employer is actually obligated to withhold taxes throughout the year. So you'll notice that you have a significant reduction from, say, what your hourly wage or what your salary is actually depositing your account. And the difference is that tax withholding that the employer is required to do. When you do not have an employer in place, the IRS still wants to make sure that it gets its money, so they don't wait until the end of the year. They want you to still pay it throughout the year. But because you're not having a W-2, you have to actually mail in or pay online these estimated tax payments. The types of income that may require estimated taxes are, one, self-employment income, because again, you're self-employed. No one is withholding, so it's your responsibility to make those payments to the IRS. This may be if you're an independent contractor, someone is just paying you a set amount. They're not taking any taxes. You're not their employee. You're in control of what you do, scheduling your time. You may be working for multiple people, and so you're self-employed. Or a lot of times this could also be, for example, like me, as a partner in an accounting firm, I'm getting a guaranteed payment, which is the same thing. No one's withholding. It's not a W-2. It's just a payment. So I have to figure out how to make those estimated tax payments. The next piece, and really the next two, are interest and dividends. So if you have any kind of investment, so I know I have a lot of clients that lent money at certain time periods, and so they have a substantial amount of interest income throughout the year. Or if maybe you have income stocks paying dividends, then you have this type of income. And so that may require you to have to pay estimates. And then another big one that we talk about on the channel here is obviously rental income. If you have income from real estate, which hopefully we've gone through all the strategies and exhausted everything because we want there to be zero tax on rental income. It's the easiest income to lower versus these other ones. If you do have positive rental income, you may have to make estimated payments on that. And lastly, business income. So if you're invested in a business or you're working actively in a business and you're getting income from that business that's not otherwise self-employment income, then that would require an estimated payment as well. To summarize, if you have any of these types of income, you may have to make estimated tax payments. Now, this may mean that if you have a W-2 job where your employer is withholding, but on top of that, say you're doing rentals on the side, you've made some loans, maybe you have a part-time investment in another business as a side hustle, and so you're not having withholding on that income, you may have the withholding from your W-2 and have to make these estimated tax payments. But the simpler way to do it, if that's your scenario, is to actually increase your W-2 withholding enough to cover the income tax on those other items so you don't have to worry about it throughout the year. Now, a lot of people may ask, okay, so what if I don't make the estimated payments? So what? Well, you may be subject to underpayment penalties. The underpayment is 5%. So most of the time you want to try and be accurate on these. If you use the rules right, you may be able to fall under a safe harbor, which we'll talk about, where you can pay some of it now and wait till April to pay the rest. The mechanics of this are fairly basic. You have two options to prevent an underpayment penalty. One, you pay 90% of the current year tax liability. For example, if you think you're going to owe $10,000 for the current year, you want to pay $9,000 in estimated tax payments, and then at the end of the year, when you owe the additional amount, you will not have a penalty. The second option is if you pay 100% of the prior year. So for example, same example, you expect your tax liability in 2022 to be $10,000, but say your tax liability in 2021 was only $7,000. Well, you could pay only $7,000 throughout 2022, and when you owe the additional amount, which would be $3,000. You could pay that in April without an underpayment penalty. So it's the lesser of either of these. So there are some strategies around this depending on how much you want to pay throughout the year. Now, of course, if you're not paying it all in, I always let my clients know that they need to plan for this. They need to know that it's coming up. Don't spend it all and then show up in April without the money, because then once you get behind, you're in a much worse position. So always make sure you're planning for the amount that's going to be due and budgeting for it. Lastly, if you're a higher income earner, when I said 100% of the prior year, you would actually substitute 100% for 110%. So if you owed $10,000 in 2021, you would have to pay $11,000 for that safe harbor to apply. Okay, now we know the types of income that require estimated tax payments, and we know how they're calculated generally. So let's go over the due dates. So they're due evenly throughout the year. So they're due on April 15th of the current year. So if you're paying 2022 estimates, then you're paying the first installment on April 15th, another one on June 15th, the third one on September 15th, and then lastly, you're making a fourth quarter estimate on January 15th of the following year, which for 2022 would be January 15th of 2023. So hopefully you found this useful, and now you know when you might have to make estimated tax penalties so you don't have a penalty for underpayment next time. See y'all in the next video.